G'day everyone, Greg Canavan here with another Rum Rebellion update for you. This week, going to talk about gold. It's been about a month since we last covered the gold market. Around that time, gold went on to have a really strong run, and obviously there was a lot of interest in the market around that time. Since then, gold's pulled back a little bit. This week, I want to point out that that's actually a good thing. And I'm going to talk about a few things that gold needs to do in order to set itself up for what I think is potentially going to be a very big move, perhaps around the middle of the year, maybe later in 2019. Not too sure on the timing front, but this is more of a long-term look at gold for investors rather than a short-term trading update. So with that in mind, let's have a look at the first chart to really set the scene for how gold looks at the moment. So having a look at this chart, as you can see, it's a longer term chart, starts back in 2008, shows the big run up in 2008 into the peak in 2011, and then the subsequent bear market that saw gold pretty much fall for the best part of 3 or 4 years into a low at the end of 2015. Now the main thing to take note of in this chart is the fact that gold has really just been consolidating sideways ever since that 2015 low. So even though it's had some big rallies and pullbacks, it's effectively traded in a range, and it's yet to break out of that range. And the last time, well, I guess the last time it traded out of there was on the way down in 2013. So what we're looking for to see the gold bull really kick into gear is a break of that upper resistance level, which is trading around about $13.60 US an ounce. So let's zoom in and have a look at where we are now. So the whole point, I guess, of an ability of an asset or a stock price or whatever to break through a long-held form of resistance is it needs to build up a bit of power. It needs to build up a bit of a foundation from which to launch from. So with that in mind, I think longer term gold bulls really want to see gold consolidate and move sideways here for a good couple of months. So in those dotted lines that I've drawn, I think, that's a rough guide for where you'd really like to see gold trade, throughout the rest of March, April, May, June, to really sort of build a bit of a base from which to launch higher and break through that resistance point. So if we zoom back out again and see that little I guess, consolidation potential that I've marked there, you can see that gold really should, or what you'd like to see is gold to move sideways. It's very rare that an asset price can make a big move and break through resistance levels in one go. And what you've seen there since I guess the end of 2018, you see gold make a move up to that point, couldn't quite get there, run out of a bit of steam, and now it's pulled back, which, as I said, I think is a really good thing. It's a really positive thing. The gold is now pulling back and consolidating, and if you can see, or if gold can continue that over the next few months, I think it puts it in a really good position to make a move higher around mid-year through that resistance level. Now, to support this view, as I always say in my videos, this is not just my opinion. You need to have, I guess, market evidence or other charts to support that view. So now let's have a look at some of the equity-based gold charts to support the view that I'm talking about from the gold chart here. So the first one I want to show you is that it's the Van Eck Vectors Gold Miners ETF. Now this is sort of I guess a large miners ETF. The ETF broke down sharply in July of last year, but it didn't really follow through with too much selling. We saw some buying support come in, and since then gold prices have started to rise. Now if you look at the moving averages there, we saw a trend change, or what I consider a bit of a proxy for a trend change with the 50-day moving average moving above the 100-day moving average right at the start of the year. And that is certainly a positive. And now we're seeing, I think in February it was, where you see that spike up. Gold stocks had moved to the highest level in nearly a year, which is a very positive sign. So we're seeing gold moving out of that danger zone and into an uptrend, which is good news. It's the same thing with the junior gold miners ETF. That trend change happened a little bit later than with the bigger miners, so roughly in January. But it's the same sort of picture there. The index is now trading above that area where the or that level where the stocks broke down from. Trend is starting to turn higher, and I think you might see a bit of consolidation for the next few months, but it certainly is an encouraging picture with the gold miners and the gold equities starting to turn around as well. I haven't had a look at silver before, but I think this is worth taking a look at. Obviously, silver is much more volatile than gold. Tends to trade with it though, but not all the time. But what we're seeing now is a trend change in silver as well, which I think is another confirmation that we're seeing capital move back into the precious metals market. So similar to the gold price, you saw silver break down quite sharply there mid-year in 2018, formed a bit of a base, had some buying support from September through November and December, and then started to move higher. And as you can see, those moving averages indicate a bit of a change of trend happening in January this year. So the good news is that silver is confirming the move in the gold stocks, which I think is a good sign for further price appreciation down the track. Now, the last chart I want to show you today is one for the silver bulls. I think this is worth taking into account if you're a precious metals investor, to really go and seek out some silver stocks, because I think you could be seeing a big move in silver if I'm right about this whole precious metals bull market playing out in the year ahead. So last chart I want to show you today is the gold silver ratio. So as I've marked there on the chart, when silver is cheap relative to gold, as it is now, it's obviously trading way up there, and at the moment you might not be able to see there, but the ratio is around about 85, which means 1 ounce of gold will buy you around 85 ounces of silver. Now, when silver was quite expensive relative to gold, when it had its big rally up to, I think it was $50 an ounce, and you can see that spike down there in 2011. 1 ounce of gold bought you around about a little bit over 30 ounces of silver, and as I've written down there, that's when silver is expensive relative to gold. So at the moment, silver relative to gold is probably the cheapest it's been in around 25 years, since 1993. So keep that in mind. If the gold or the precious metals bull market does get underway, I think you're going to get a lot more bang from your buck from silver. Silver is very, very volatile. Silver stocks can be very volatile as well. So keep that in mind. But it's just worth noting that silver at these levels, cheapest it's been relative to gold in about 25 years. That's a wrap for today. Thanks for listening. I'll come back and give you another update roughly monthly on the gold market, see how it's going. But I think there's plenty of money to be made in this sector if we play it right in the year ahead. Thank you.